Ladies and gentlemen, good day and welcome to Rane Group Q4 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dinesh Sarda from Ernst & Young. Thank you and over to you, sir.
Thank you, Muskan. Good afternoon, friends. Welcome to the investor call of the Rane Group. To discuss and answer a question today, we have the management team from Rane Group represented by Mr. Hari Rane Group, Mr. P.A. Padmanabhan, President Finance and Group CFO, Mr. Siva Chandrasekharan, Senior Executive Vice President of Secretarial and Legal Services, and Mr. M.A.P. Sridhar Kumar, Executive Vice President Finance and CFO of Rane Holdings Limited. Please note that we have sent you the press release and also we have sent you the presentation link of the deck. In case if you have not received the presentation, you could look at it on our website or even the BSC site of Rane, or you could write to us and we'll be happy to send the detailed earnings presentation over to you. Before we start, I would like to say that everything that is said on this call that reflects any outlook for the future or which can be construed as a forward-looking statement must be viewed in conjunction with risks and uncertainties that we face. These uncertainties and risks are included but not limited to what we mention in the prospectus and subsequently filed annual reports, which you can find also in our website. With that said, now I'll hand over the call to Mr. Hari Lakshman. Over to you, sir.
Thank you, Dinesh. Good afternoon, ladies and gentlemen. Thank you for dialing in. I'd like to welcome you all for this teleconference. It's a pleasure to connect with you on this platform as the chairman of the group for the first time. You would have seen the Q4 FY24 performance highlights of the group companies, which we posted on our website. I'd like to start off by providing a few comments on the industry. The automotive industry had a mixed performance in the final quarter of the financial year 24. The PV segment, while experiencing record high sales, was propelled by improved vehicle availability and significant contributions from the SUV segment. However, there was a drop in the M&HCV segment, and the pre-buy in the Q4 of financial year 23, compared to what we did not see in FY24, resulted in muted performance of the CV segment. There was a drop in the sales of farm tractors compared to the previous quarter due to the erratic weather conditions, which adversely affected agricultural output and income. The two-wheeler segment had robust growth, helped by improved demand in key overseas markets. Coming to our group performance, the Rane Group had an aggregate sales of about 7,200 crores, with 8% growth over the previous year. I'm happy to share that this is our highest ever group aggregate sales for any financial year. The revenue from the domestic OE customers grew by 9%, and revenue from international customers increased by 4%. And the slower growth was also on account of the divestment of our US subsidiary LMCA. On organic basis, the exports have actually grown by 15%. The EBITDA margin of RHL consolidated decreased by 38 basis points in FY24. I'd like to now talk a little bit about each of our businesses. On Rane Madras, the demand for the steering and linkage business was impacted mainly due to the drop in passenger car, particularly the entry-level models, and also the farm tractor segment. Export sales grew by 10% despite a drop in the offtake of the off-road vehicle segment in the US. The light metal castings India witnessed a growth in exports of about 18% with ramp-up of volumes in some new businesses. We also won new business worth more than 500 crores across products and customers during this year. Unfortunately, the EBITDA margin declined due to the lower absorption of fixed costs and due to sales drop as well as certain one-off provisions. In REVL, I'm happy to announce that we achieved the highest sales ever for the company, driven by robust sales growth and enhanced operational performance. We grew the business by 14% in FY24 with strong growth across all market segments, domestic, aftermarket, as well as exports. The turnaround and sustenance plan started a couple of years back is yielding results in operational efficiency, capacity realization, export growth, and better cost management. For the year, the EBITDA margin improved by 157 basis points. The company has devised strategies to expand share in the domestic market with certain identified customers in the automotive segment and also focus on EV insulated sales, which includes the application like power generation, stationary engine, marine, locomotive, etc. The company has revised its vision to enhance product portfolio with some non-ICE components, which has similar manufacturing process. Coming to Rane brake lining, I'm happy to share that RBL also has achieved the highest sales for the quarter and for the fiscal year. FY24 sales grew by 10% with support of strong sales to the two-wheeler segment. The aftermarket customers grew by 6% and export sales grew by 33%. For the year, the EBITDA margin improved by 105 basis points, mainly due to lower material prices and favorable forex. Operational improvement initiatives and energy savings initiatives help to mitigate inflationary pressure on other operational costs. Coming to our joint venture with Zenith, as you are aware, Zenith Rane Automotive India Private Limited acquired 100% of the steering wheel manufacturer TRW Sun Steering Wheels Private Limited. This acquisition places our company in a strong position to provide comprehensive solutions covering occupant safety and system integration services to domestic customers. Despite the sluggish M&HCV market in Q4, the steering business grew by 12% during the year. The occupant safety business is benefiting from the evolving safety regulation in India, and the revenue grew by 20%, supported by strong offtake from domestic customers. And this growth does not include the PSSW acquisition. The EBITDA margin for the joint venture improved by 33 basis points during the year. Vertical integration of inflators and webbing plants will help improve competitiveness in the Indian market, and both the plants are fully ready and nearing production. Coming to Rane NSK joint venture, RNSS had a 14% growth for the year. The EPS business registered a good growth driven by strong offtake in the served model. The company won new business worth 550 crores across various customers. EBITDA margin was unfortunately impacted due to the unfavorable mix. As explained in past calls, some of the new businesses have a much lower profitability compared to some of the earlier programs. So the management is working on improving these. Given the return trends on the quality issue, there was no further warranty provision, and we see a closure on this issue. Coming to the outlook, FY24 has been an eventful year for the group, given our efforts to rebalance the product portfolio. We achieved the divestment of both our telematics business, Rane T4U, and our casting business in the US. The merger announcement of the operating entities of the group to create a larger company will serve as a strong platform for future growth. And the acquisition of the steering wheel, TRW Sun steering wheel business, enhanced our occupant safety product portfolio to provide comprehensive solutions. As we look ahead in FY25, we remain reasonably positive on the prospects given our order book position. We plan to invest about 1,000 crores over the next 3 years in terms of capex. We continue to prioritize operational improvements and cost savings. With these remarks, we'll now open for any questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for the moment while the question queue assembles. The first question is from the line of Sunil Kothari from Unique PMS. Please go ahead.
Thanks, sir, for opportunity. And Harish, congratulations and lots of good wishes for this more responsibility and chairmanship of the well-respected group. Sir, my first question is on this. If you can talk something more about qualitative benefits of this merger. Basically, as you announced, you have taken the decision of merging these 3 operating entities in one company on the basis of investor expectation and suggestions. So normally, as an investor, we always expect better performance, better profitability, and better return. So what type of benefits in terms of cost, integration, maybe some merging of some factories, what type of advantage and benefits we'll have over the next 2-3 years? If you can talk a little bit more, it will be really helpful to guide us about our investment for next many years.
Thank you, Sunil, for your wishes and your question. And I mean, as you said, I can only talk in general language about the benefits of the merger. We are not yet ready to, put any specific numbers to it because we are still working on them. But clearly, the idea of behind the merger, as you know, I think this is being asked by many investors over many years, and internally also for a very long time we have been discussing this and waiting for the right time to do it. I think the idea is to clearly create one large company which will serve as a platform for future growth in addition to whatever growth we see in existing product lines. But in the process of merger, obviously there are going to be some straight benefits, some that are direct and very direct. For example, from 3 listed companies to 1 listed company, straight away being a listed company costs come down, compliance costs comes down, board positions and board related costs start coming down. So straight away there are benefits like that. Then there are second benefits like the combined balance sheet will be stronger than the individual balance sheet. Therefore, ability to raise capital at lower cost. I'm talking predominantly debt. Ability to leverage on debt, tax benefits. As you know, a company like Rane Engine Valve made losses for many years, and there are accumulated losses. So there are ability to accelerate tax set off for taxes, etc. So there are those kind of synergies. Then the third bucket is a little bit more long term in terms of can we combine certain operations, can we combine certain support functions that provide support to various businesses. By consolidating, there will be more further benefits. So we are splitting these benefits, cost-related benefits, into these 3 buckets. And we're still working on the numbers. I'm sure at the appropriate time we will share with our investors what the savings will be. That will happen immediately over time across these 3 buckets. Over and above this, of course, the idea is to be able to leverage this single balance sheet and drive further growth, cross-selling between customers. So today, for example, Rane Madras I'm talking both the steering and casting division, has got 700 crores of exports, close to 700 crores of exports, whereas a brake lining has only 35 crores of exports. So straight away we can leverage the customer base by enhancing this. Similarly, Rane Madras can leverage on the aftermarket strength of Rane brake lining. So there are also these kind of synergies which may be very difficult to numberize, but there will be a very clear benefit by the ability to, what I call cross-sell some of these products. So these are the many positive things that we see from the merger. Of course, the merger, just for everyone's benefit, the merger process is still underway. I think it's, as everyone knows, it has to go through the stock exchanges and then the NCLT, etc. So all the preparatory work is still going on, and obviously it's going to take several more months for the merger to be complete. So hopefully, once that process is completed, hopefully the market will better appreciate this new merged entity.
True.
Thank you.
Yeah, sir. Second question is on one very interesting observation from my side is Rane, we being a very conservative group, we never feel good about paying very high interest burden and all. And if you take all these three collective combined entities, our interest burden is currently 60-65 crore per annum. And in my first question's reply, you didn't mention about any extra resources. So I would like to just draw your attention. Say our Velachery plant, which we vacated, we may have some corporate office or something like that there. But just 200 meters away from this Velachery, our factory of Rane Madras, the DLF has sold 4.5 acre land to Chola Group, Burgupa Group at 735 crore. So I feel that area is now getting a reasonable valuation we were expecting since last 5-7 years back. And we have this little bit strained balance sheet and we are paying very high interest. So would you like to take this type of tough decisions like you've taken during last year or two? Because these are the unused or maybe extra resources which may be useful to improve the business balance sheet and grow in a confident manner. So your thoughts will be really helpful.
Yeah. I mean, there are no clear thoughts as of now, Sunil. From what I hear, Chola has purchased his land to build their own corporate office.
Yes.
So we also are having our corporate office in Velachery. And of course, as far as the debt is concerned, we are, as I explained very clearly, I want to assure the investors there is a lot of focus on reducing debt. And we must look at the post-merged balance sheet and how the debt level is for this new Rane Madras. And based on that, we will be taking action. But I can assure you the intent is to reduce the debt. So what actions we will be taking, I'm not able to share at this point in time.
Correct. And sir, just last question. Will you be open to use any extra resources, whatever Rane Group will have, if required, to strengthen the balance sheet and business?
Yes, absolutely.
Thank you, Hari. Wish you good luck. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Pratik Kothari from Unique PMS. Please go ahead.
Hi, good afternoon, Harish, and best wishes for a new role. So my first question is on this warranty claim. I mean, it's a tough topic for us for the past 2 years, first at NSK, then Rane Madras, now again at Engine Valve. So I'm sure you'll be more disappointed than anyone else, but your comments on what is it that we are doing, how are we solving it, what is it that we have done? This time and again we are seeing something or the other. I mean, the quantum might be different. I mean, it's very small in Engine Valve this quarter or this year, but time and again we are seeing this repeat. So some comments, what are we doing to solve this?
No, I mean, it's always a challenge. I think this is, a lot of effort goes into making sure our product quality and robustness is right. As far as, of course, the Rane industry, that has been a very, very painful journey. And of course, as I mentioned in the opening remarks, we believe that it is behind us and no more, provisions, etc., under that issue will come up. Yes, but it's been unfortunate. Yes, during last year, not only Rane Jindal, Rane Madras also had an unexpected warranty claim that hit us. Of course, much smaller magnitude, but still, it is costing the company. So there is a lot more focus on our product development and manufacturing process. And of course, in sometimes when there is also export business, the risk does go up to that extent more, because any sort of warranty in an overseas market, as was the case with Rane engine valve, turns out to be even more expensive. So, I mean, the only answer is making sure our quality, both product development quality as well as manufacturing quality, continuously improves. And there is a lot of focus, all of us are putting into that area.
Fair enough. So, my second question on export, I believe for the past, maybe 10, 15 quarters, we were growing at a very, very healthy clip. I mean, 30%, 40% year on year. Surprisingly, in the last 2 quarters, and in quarter 3, it was flat. This quarter, we were down 10%. So, this sudden change, and anything has materially changed outside? And how should we look at exports going forward?
Hello, sir.
1 second. Just hold on 1 second. I'm just getting the number. So I just want to put it in perspective. As I mentioned in my opening comment, the international, what we call international sales, included our casting business in US. So, for the year, while the growth has tapered, it's also because of the sale of our US investment. Actually, on a year-on-year basis, the export has grown by about 15% for the year. Now, on a Q4 basis, I think, again, you will see that number lower because of the US investment would have been in last year's Q4. It is not there this year.
I need these to share.
Sorry, sir, your voice is breaking.
Yeah, I'll check the numbers and get back. So, third question on other expense. Either quarter on quarter, year on year, this is specifically to Rane Madras. Our sales are, substantially lower, but other expense has moved up substantially from 20-25%. So, any one-off, anything which is sitting there, 90 crores becoming 110.
Yeah. There were certain one-off, provisions that have to be made. So, and these are only provisions at this point in time. We will have better clarity in the coming months on, whether they can be realized or not.
But any quantum, what is it regarding?
So it has got something to do with our sale of the US business. The quantum is approximately 12 crores out of that, where, there is some deferment in the payment that is to be received. If you recollect, when we sold the US investment for close to 4.9 million, there were some deferred payments there, so there is some delay in that. But as of now, we don't see any risk to receiving the amount. There is just some delay, but we went ahead and decided to make a provision.
Okay, sure. Thank you and all the best.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Manish Goyal from ThinkWise Wealth Managers. Please go ahead.
Yep. Thank you so much, and congratulations, Harish, on becoming a chairman for the Rane Group. Best wishes, sir. Sir, I have a few questions. Kindly bear with me. So, in particularly when Pratik was asking question on the exports business, but when I probably whatever you report in your presentation and the quarterly press release, so I believe those numbers are always for standalone. And in Q4 we are seeing a 11% decline in the exports business, which probably in last 2-3 quarters are on a declining trend. So I was just wondering that if you have been getting so many export orders for last few quarters, why has it that the run rate has been probably on a downward curve? And how do you see it going forward? That was my first question.
Yeah. Okay. No, so you don't know. Okay, I think I misunderstood that question when he had asked. So that is only on a Q4 basis. Q4 to Q4, there was a decline, and that's mainly because of some slowdown in the which I mentioned again in my opening remarks about this off-highway vehicle segment in the US that we export to. So there is no concern on the export front, but at the same time, the rate at which we grew in the last 24 months, if you look at Rane Madras, the last 2 years, the export jumped significantly. In fact, if I remember last year, we grew actually 40% in export, but that was because of launching of many new programs. So during this last 6 months, as well as during the next 12 months, there are no major new programs we are launching at that level. So to duplicate the last significant growth we saw in that last 2 years will not happen in the next 12 months, but it will still continue to grow. There is no doubt that exports are going to continue to grow. But the rate of growth may not match last 2 years. But we are still in discussions for many new programs that are going into production in 2026, some in 2027. So some will jump again when we introduce some new large programs. So I hope I'm answering your question.
Okay, sure. Thanks a lot for that. And on particularly for ZF, sir, so if you can just give more perspective on the acquisition of TRW Sun. Basically, what we read was that it is a steering wheel company, and so how is it complementary to us, and what is the size, what is the cost of acquisition? That was one question. And then also related to ZF Rane again, that sir, we have set up facility in subsidiary. You did mention in opening remarks that both the plants in Theatre and Webbing has started. So what is the kind of capex we have done? I believe this is under the PLI benefit. So what kind of revenues or maybe benefits we can see in terms of margin improvement? And also, like, how would you be reporting it going forward? Because now you have 2 subsidiaries at ZF.
Yeah, so I'll try and answer all the questions. So as far as this acquisition is concerned, this was originally, while the company is still called TRW Sun Steering Wheel, it was owned by ZF by 49%, and 51% was held by some other Indian promoters. And this joint venture has been there for many years. And this is actually the actual steering wheel that we have inside the car, and where the driver is holding on to. And as you know, the airbag, especially the driver airbag, is inside the steering wheel. So today, our joint venture with ZF Rane, while we make driver airbag, we actually many times supply the airbag to a steering wheel manufacturer, and then it's integrated into the steering wheel and then supplied to the OEM. Not in all cases, but in many cases. So, and this product is already there in ZF's portfolio. So there was an opportunity for to exit the other Indian promoter in that company. So after a lot of discussion with ZF, we decided that our joint venture will make the acquisition, and we will integrate it into our seatbelt and airbag business. And globally also for ZF, the steering wheel, seatbelt and airbag is all consolidated into one division of ZF. So from a pure product strategy and a market standpoint, this is a very good acquisition. I think in terms of the acquisition price, we paid 139 crores for this business. The business has about 140 crore turnover, and the EBITDA is at about 8.2%. And the idea now is that post this acquisition, Rane will be fully managing this, and hopefully we can grow this with ZF even faster than they have been able to with the other Indian promoters. So broadly, this is the strategy behind the acquisition. Now coming to the second point, yes, under the PLI scheme, both the plants investments have been made. Do you know the CapEx? Can you point? No, how much have we invested? Yeah. So we have invested close to 350 crores over the last 2 years. I mean, not only for these two, but also in some capacity expansion. So I don't have the exact split up, but sorry, 260 crores. Answer that because I included the steering. So on the occupant safety side, we invested about 260 crores going in for both inflator as well as the webbing plant, as well as some capacity expansion in seatbelt and airbag. So the main purpose of this investment is for margin improvement, because both the initiatives are backward integration. We were importing these two products, the webbing and the inflator, and now we are going to localize them. Webbing production has already started. Inflator is going to start very soon. So this will improve the margin. My guess is close to about 1.5% improvement in margin. Obviously not from next quarter, but let's say a year from now, we will be seeing about 1.5% improvement in the margins in this business. As far as your third question on how we will be presenting the numbers, obviously we will be presenting only the consolidated numbers. But what we share with our investors, since this acquisition just got completed, we have not had the time to, we are still talking with that management. We have to first focus on, integrating the management of that business into ours. So we're still doing a few things post-acquisition integration. So very soon we will have a clear idea on, how we will communicate this with our investors.
Sure. Okay. And sir, one question on Rane NSK. So this quarter particularly, press release mentioned that we have a large order of 250 crores. So sir, would just like to get a perspective, like when we say new order wins, would it mean that this will be incremental revenues for us, or probably as time passes over next 2-3 years, as this new program starts, we probably lose some old business as well. So how should we read into it? And you did mention that for full year you have got 550 crores new orders in NSK. So then a second question to this is that by when do you think that we can probably see the margin improvement in NSK, sir?
Yeah, so these are new businesses. Of course, they go into production, one in 2026, one in 2027. So the impact of this in terms of our sales, etc., we will see only in the later years. But these are incremental businesses. They are not a model replacement business. So that is the answer to the first question. Second, unfortunately, as I said, this margin pressure, over and above coming from the warranty is definitely a concern. We are working on several margin improvement initiatives, to see what we can do. I think, trying to show the same level of operating profit, what I'm talking without warranty, what we've had in the last 2-3 years, it will take another couple of years to get back to those kind of profitability levels. But clearly, beyond the 2-year time frame, we are seeing a lot of opportunities to enhance the margin in that business.
Sure, sir. Sir, I have few questions. I'll come back in the queue, sir. Thank you so much.
Thank you. The next question is from the line of Ankur Jain, an individual investor. Please go ahead.
Hello, I have a question regarding Rane Madras. When can we expect some margin improvement?
We're all waiting to see how the market is post first quarter. There is a general view that post-elections market will improve, and if, especially the farm tractor segment as well as the commercial vehicle segment. As you know, Rane Madras has a significant dependence on these two segments. So hopefully, if the market picks up, we should see some improvement even during this year.
Okay, thanks. I have another question regarding the TRW acquisition. The 139 crores you mentioned, is it Rane's share or TRW matched the same amount?
No, what we did was we purchased 100% of the shares of that company. So it's for the total company, for the 100% of the shares, in which ZF owns 49%.
Okay, got it. Understood. That's all from my side.
Thank you. The next question is from the line of Rajkumar Vidyananthan, an individual investor. Please go ahead.
Yeah. Good afternoon. Am I audible?
Yes.
Yeah. So the first question is on ZF Rane. The presentation says that the EBITDA margin improvement is due to some one-off gain. So if you could please quantify what is the amount of gain?
Sorry, your question was not clear. Can you repeat?
In the presentation, for ZF Rane, the JV, it says the EBITDA margin improved mainly due to one-off gain. So just want to know what is the amount of one-off gain?
Amount was around 14 crores.
Okay. So which means if you go back to steady state.
It's about 11.5 crores, not 14 crores was the one-off gain.
Okay. So for next quarter onwards, if we go back to the 10.5% which we did in Q4 FY23, right?
Yes.
That's the steady state margin. Okay. And so the second question is this 1,000 crore capex that you mentioned that you will be investing in the next 3 years. I just want to know how much would be to the JV ventures and how much will be to the RML, the merged group.
Yeah. More towards the JV. 1 second. Correct, 1,000. So about 400, 55% will be from JV and 45% from the merged RML.
Okay. Okay. And so the next question is, what is the closing warranty provision we have in Rane NSK, and any chance of any of that amount getting reversed?
Yeah. So I think there is about close to about 28 crores of balance remaining. And as I mentioned in the opening comments, the way the warranties have been coming in the last 6 months, we don't see the need for further provision.
Okay, but this entire amount will get consummated. Okay. And sir, any update on the compensation? Because in the previous calls we have been mentioning that we are talking about getting some compensation from NSK, given that they are getting the royalty payments. So on this warranty.
As I said, it's a complex issue with multiple entities. So various conversations are going on. So as and when those conversations are completed, we'll share with the investors.
Okay. Okay. And sir, the last question, what is the outlook for the tractor segment given that the IMD has given a good monsoon outlook? So do you see any green shoots appearing there?
So we don't have any additional insight. We are going by what Mahindra's and CAFE and ITL, some of our major customers, we go by what they are saying. The general expectation is that this year also is not going to be a great year. Just hold on. Yeah. So we are forecasting actually a 0% growth in the tractor segment this year. That is the outlook that we have looking at based on what we hear from our customers.
Okay, sir. Thanks a lot.
Thank you. A reminder to all participants, you may press star and one to ask question. The next question is from the line of Abhishek Jain from Investwell. Please go ahead.
Hello. Hello.
Yes, your voice is
Hello. Okay. I've got a couple of questions. One among them is that we are investing in auto tech fund. Do we have any synergy with the investing companies? Like we are doing some business with them, or these are some high-tech startups that we intend to acquire going forward?
No. So this is through Rane Holdings. This is a VC fund that we invested almost 5 years ago, and this VC fund invests in some startups, mainly in the North American market. And this fund is also based out of Silicon Valley. So other than the investment that we have and us being a limited partner in that fund, there is no other specific business dealings with them. Of course, we obviously have a business relationship with them. So for some evaluation of some new technologies, etc., we might have some phone calls with them and get their views, etc., things like that, but nothing more than that.
All right. And sir, these days, India is emerging as a manufacturing hub, with the government providing tremendous opportunity and incentives. So many engineering companies as well as groups have successfully diversified into other sunrise sectors like defense, aerospace, electronics and all. Do we have any vision of diversifying into other product segments other than auto?
Yeah, I mean, currently I would say no. I mean, it's not that we will never look at it, but right now our focus is, to capitalize on the growth opportunities we have at hand, consolidate our business, reduce debt. I think these are the main focus from the next 1 or 2 years perspective. And even when I look at the next 3-4 year perspective, there's plenty of opportunities within our own product lines as well as maybe new product lines in the automotive segment. So I think that's where the focus is right now. But if you ask me from a 10-year perspective, yes, it's possible that we also look at certain non-automotive investments.
All right, sir. And so the provision that we have provided in NSK for warranty, that's I think over 550 crores. So basically these are just a provision and not the company has made cash losses till now.
No, cash. No. We made a provision, and as I explained earlier, most of the cash has been disbursed as well. So there's only about 28 crores of provision left.
All right. And how much cash did we disburse in NSK for warranty in NSK?
That's what? Out of that 500 odd that you mentioned,
Correct.
Yeah, only 28 is remaining.
Yeah, meaning 472 crore rupees has already been disbursed. 472 crore plus.
Yeah.
Okay, fine then. And another thing is that, sir, in the precision die casting company or the Rane Light Metal, we have incurred losses of over 400 crore rupees. Correct. But during the acquisition time, the enterprise value of this precision die casting that we acquired was $9 million, of which $2 million was the equity. All right. So the thing is that we are provided the losses. When I see the financials of Rane Madras, the standalone entity has shown almost 400 crore rupees of losses, but whereas in the consolidated entity, the losses are substantially down. So what is the reason behind the two in standalone and consolidated, showing losses of so much of difference in losses? Hello?
Yeah, just hold on 1 second.
Yeah, sure.
Okay, hi. So I mean, we don't have an exact answer at this point. I mean, in the sense that, see, we were earlier making impairment provisions, etc., right? So when we finally did the transaction, there will be some of those adjustments.
No, that's okay. I don't mention. What I wanted to ask was that there is a difference, substantial difference in the loss shown in the consolidated entity and the standalone entity. So what is the difference in the two, and how much cash losses did we make in that investment? Out of the 400 crore rupees, that 400 crore rupees was a cash loss, or the cash losses was way lower than that? If that is possible to figure out.
Yeah. First, regarding the consol and the standalone difference, the consolidated accounts of RML year on year already takes into account the entire losses of the subsidiary, overseas subsidiary, and so it is showing it's taking into account a larger loss. Whereas in the standalone, we provide only for impairment, which could be a portion of that. Because of this reason, when we finally divest, only the balance amount of loss is taken in the consolidation, whereas the standalone has to take into account the entire balance. So because of that, there will be a difference between the standalone and the consolidation.
All right, sir. And how much would have been the cash losses? Because what I understand is that in NSK and in Rane Madras, together the company has made 1,000 crore rupees of cash losses.
It's not 1,000 crore.
500 crore rupees and NSK in the joint venture, that's okay. The group share is 250 crore rupees. But as a company as a whole, in the joint venture as a whole, and the Rane Madras, the 500 crore rupees plus 400 crore rupees, that's 900 crore rupees of cash losses. Is that fair to assume this figure?
Yes, approximately. Yeah, of course, there are two separate entities, as you know. Yeah, but yes. Yes.
And the JV only 49% out of that 560 crores.
49% belongs to Rane
Holdings.
51 is NSK.
So that's why it won't total up to 1,000, because out of the 560, only 49% is carried by Rane. And in case of RML, of course, the amount will be full amount.
Okay, so that's all from my side. Thank you very much.
Thank you. The next question is from the line of Manish Goyal from ThinkWise Wealth Managers. Please go ahead.
Yeah, thank you so much for giving opportunity again. Just want to clarify this 11.5 crore one-off gain in ZF is due to on what account, sir?
So some land sale, based on some government requirements, some land had to be sold.
Okay.
For some highway purpose.
Okay. And sir, at Rane Madras, if you can share how is the progress on setting up the Mexico facility, and have we probably able to get more orders which were there in the pipeline which you had mentioned last time?
Yeah, so work is underway. I think, as I explained earlier, revenue generation is going to start only next year, August. So things are going as per plan. Some customer audits have happened. They're all going well. So there is, I would say at this time, everything is heading in the right direction in terms of Mexico operations. But again, the revenue generation is going to start only, second half of 2025. Yeah, the team is continuing to work on new businesses, and of course, as and when we secure another order for the Mexico plant, we will be sharing with our investors.
Just to clarify, this second half of calendar year you are trying to say? Or
calendar year, correct.
Okay. And sir, this is a bit broader question in terms of the 4 pillars what we have mentioned in our presentation at the start of it. So just like to get some perspective on any new things which we are probably working, like one of the pillars is new technology and product introduction. So maybe if it would be possible to share some perspective in any of the companies, and also particularly for aftermarket, probably why is it that Rane Brake being such a strong player in past has not been seeing growth in the aftermarket? What are the challenges, and how do we intend to grow exports in Rane Brake as well? Thank you.
No, I think the second question you have to repeat, Manish. Can you just repeat again? I didn't understand the question.
No, so it was related to growth in the aftermarket, which is one of the 4 pillars again. And in particularly for Rane Brake, which probably has a larger share of aftermarket revenues in the revenue, which is more than 30%. But somehow it's been not growing much, so would want to know what's the reason. And then related to Rane Brake, another question as to how do we intend to grow our exports? Are we probably getting any support from our technology partner? Yeah.
Yeah. So as far as the first one is concerned, the 4 pillars, of course, we are looking at new technology and product introductions. And of course, the last year, 2 good examples is the inflator and webbing, which is more a margin improvement investment rather than a growth. And and of course, other than that, we are also adding some new incremental products, in terms of the hydraulic business that we did in Rane Madras. So those kind of things. But as I said, from a next 2-year perspective, our current focus is on consolidating our businesses, creating this single balance sheet, and preparing this new Rane Madras, which can then start adding further new products. And especially with all the things going on in EV, for us, 92% of our sales, we are still agnostic. So there is no need for for us to panic and start making some investments for the future. A lot of work is going on assessing new opportunities, but we want to make sure we will also reduce our debt levels. Also, I had mentioned, so we want to bring all those things down before we start making some investments in new products. Coming to Rane Brake Lining, see the market, the aftermarket has also been, especially where product lines have exposure more to M&HCV and passenger car, and not so much the two-wheeler. The market has been a little dull in the last, actually I would say 12 to 15 months, which is why the overall aftermarket business, including for Rane Brake Lining, growth has been, not satisfactory. We would have also liked to have seen better growth. But having said that, the merger now, allows us to consolidate all of our aftermarket business, under one company, that suddenly the aftermarket business, we start looking at it as a 600-700 crore business, and our ability to synergize, again I mentioned earlier, synergize across all our aftermarket products and enhance growth. We are seeing a lot of potential from the next 2-3 year perspective.
Thank you so much.
Thank you. The next question is from the line of Krishna Swami Mohan, an individual investor. Please go ahead.
Hello. Hello, can you hear me?
Yes, you're audible, sir.
Okay. My first thought or the first statement is congratulations to Mr. Harish for taking over as chairman, and also my sincere appreciation of Mr. Ganesh for the valuable contribution and leadership he provided to the group. So please accept, please convey this to Mr. Ganesh. Next question is with regard to, again, congratulations on a significant jump, almost 50% in the dividend payout from 17% to 25%. Now, again, thanks for that. And concomitant question is there any policy on dividend distribution? Do you say I'll distribute 25%, 30%, 40%, some percentage of the net profit as dividend? This is number 2 question. Number 3 is the status of the Mexico plant. You've already answered, but do you have just one customer over there, or do you have at least 2 or 3 customers? And if it is possible to divulge the name of the customer and also the name of the product that you're going to export out of Mexico. And I've already said that there's not going to be a significant value addition in Mexico, but To what percentage? Maybe 10%, 15%. So these are some of my 2 or 3 questions and observations. Thank you.
Thank you, Mr. Mohan. Thank you for your wishes, and I'll make sure I communicate it to Mr. Ganesh as well. I assume, as far as the dividends is concerned, your question is relating to Rane Holdings. Yes. Generally, in Rane Holdings, we target to, declare about 50% as the dividend payout, which is, about close to 50% of our PAT on a standalone basis. We have been consistently doing that in the last 3 years. Of course, before that was COVID. But so it's not a clearly stated policy, but our aspiration is to do a 50% payout of our PAT on a standalone basis. Coming to your question on Mexico, yes, we have only one order so far, one reasonable sized order, and this is for ball joints. As you know, we have been steadily enhancing our ball joint exports from India, and one of our customers expressed a strong desire to have a plant in Mexico. As you know, with this new USMCA, which is the old NAFTA agreement, there is a lot of incentive in doing some value addition. In terms of the value addition percentage, I don't have the exact number, but basically we're doing, and I'm sure you know this product well, so they're basically doing a little bit of machining and the full assembly of the ball joints in Mexico. So it's mainly assembly and just machining of 2 of the components. All the forging and other parts, etc., currently will come out of India, but gradually, we intend to localize further in Mexico.
Thank you. Thank you for that. One other question is relating to our exports, especially to the U.S. Now that very recently U.S. has imposed additional duties on steel and aluminum on imports from China. And we've been hearing this China plus one is going to take off. U.S. is going to import more from India. We're getting more opportunities. Do you see a significant effect of this? Is there only talk that there is going to be greater imports by United States vis-a-vis China? Is that happening, or is it more talk or more expectation?
So I would definitely say that our RFQ pipeline has gone up in the last 18 months. When I look at the pipeline compared to previous years across product lines, not only Rane Madras, even Rane engine valve and Rane brake lining, the RFQ pipeline is increasing. And we think clearly that because of the China plus one benefit, and there are examples of 1 or 2 smaller businesses that we have won where the customer moved away from a Chinese source. So I do believe that this China plus one is a real opportunity. How much we can convert and how much US also will actually, US customers will end up moving away from China is still to be seen. I think this whole trade war with China is still evolving, and where it is going to end, we'll have to wait and see. But I think definitely there will be a positive shift.
And continuing on the same vein, in the last, let's say, 3 to 4 years, do we see any significant advantage in terms of commercially cost advantage of India vis-a-vis China in terms of labor cost or material cost or anything else? Has that happened, or is it still at the same level of, let's say, differences between China and India? Do you see any advantages accrued to India in the last 4 years because of increasing Chinese labor costs vis-a-vis India? So India has also gone up. But do you see any significant advantage for that?
Yeah, I understand your question, but honestly, my honest answer at this point in time is we are not yet seeing where India is getting to be more competitive. That is not standing out clearly. Even recently, in one of the orders for one of our product lines, we lost to a Chinese competition. The customer was based in Europe. So And as everyone knows, the cost efficiency of China is still something that is opaque. We don't know how much of it is genuine efficiency and how much of it is support. So we are still, not able to fully understand that. So I'm not able to clearly say that we are seeing in some of the recent quotations, India is getting more competitive than China. I'm not able to say that.
Okay, thank you. Yeah, thank you for that. Thank you. That's all.
Thank you. The next question is from the line of Rajkumar Vidyanathan, an individual investor. Please go ahead.
Yeah, thanks for the follow-up. So the question is, you mentioned in your remarks that, the passenger vehicle market is moving towards premiumization and preference to SUV vehicles. So given our exposure to entry-level segments in RML, just want to know what is the long-term impact for RML entity because of the change in market preference?
Yeah. So, there is no concern, I would say. The concern is our current book of business is more skewed towards the lower level entry car. So, unfortunately, last year we have not done as well as because our portfolio is skewed towards lower entry car. But from our product, technology, capability standpoint, it really, for us, we are across the spectrum. So we are as capable in the SUV segment or not. So some of the future businesses that we are booking is in the SUV segment. So unfortunately, it's just the current mix that is hurting. There's no, from a long-term perspective, there is no concern.
Okay. Got it, sir. And sir, if I see RML standalone operating profit margin, we used to do about 10%, if I see the last 4-5 quarters. Now that has dropped to 5%, and I understand there is some compensation for provision for some of the deferred compensation, about 10 to 11 crores you mentioned. So I just want to know, is it fair to expect that the coming quarters, the margin will go back to the 10% that you used to make in the prior quarter?
No, it's going to be a little slower process because, the first half of, this is Q4. Last year Q4 was also very good. And as I said, both the tractor segment and the M&HCV segment has significantly slowed down. So as I said earlier, those two segments need to start picking up for RML margins to also improve. I'm saying over and above whatever cost reduction initiatives the company is working on. But we need to see a uptick in the demand in those two segments as well.
Okay. But it will, okay. So you don't think that the margins will improve from current levels till the other two segments improve?
Yeah, from a short-term perspective, yes. There will be the adjustment for that one-off that I mentioned. So that extent it will go up. But, getting back to,
Okay. And sir, on the same point, so this deferred compensation provision that you have made, is it because we have not met some of the governance as per the agreement, or is there any other reason we have made?
No. Nothing from our side. It is just that the buyer is requested for some extra time.
Okay. And what is the timeline for receiving this amount as per the original agreement?
It's still under discussion. We should have received one half of the pending amount by March, and therefore there is a delay. So we are still negotiating that with the buyer.
Okay, got it, sir. And sir, any cash infusion required for NSK Rane, given that the performance continues to deteriorate? And also, any outlook for this NSK Rane JV, because you mentioned that it will take about 2 years to go back to the 3-4 years back margins to come. I just want to know what is the path for the NSK for the next 2 years, if you could give some color.
Yeah, so definitely, we are also not happy with the performance of the business, and we are working on various options on how to improve the margins. But even to your specific question, is there any equity infusion plan? As of now, no. But as and when there are something, we will share with the investors.
And on the margin outlook, sir, what is the outlook? Because you said in 2 years the margins will improve. So what is the growth path? Is it like 50% improvement we'll see in year one and so on?
The next 2 years will continue to be a challenge. We are working on cost reduction initiatives, some maybe price improvement. But the ultimate solution will be to also start booking new businesses that will go into production in future with better margins. And as I announced in my opening comments, as well as what we put in the investor presentation, we have booked some new businesses for 550 crores. Obviously the margins for that are better, but they need to kick into production, which will start only in 2026.
Okay. So you're saying only the scale will give you the operating leverage to improve the margins? No?
I mean, some further operational efficiency is possible, but largely yes.
Okay. And so the last question, in the previous call also I asked this question. So you said you institutionalized the shareholding of Rane Madras. Given the merger, you will have now a significant scale to present to the institutional investors. So I just want any progress made on that.
No, but obviously our objective is to get the merger done, and then hopefully as we are closing towards the merger date, I think we're still several months away, at least 4-5 months, if not more. I expect the institutional interest, etc., will start picking up closer to that time. I think everyone will first want to see the actual merger happen before the interest goes up.
Okay. Got it, sir. Thanks a lot.
Thank you. The next question is from the line of Aman Shah from Cheetah Investments. Please go ahead.
Hello. Yeah, thank you for the opportunity. My just question is the 1,000 crore capex that we'll be planning for next 3 years. What is our typical return on invested capital that we are seeing on this capex?
So I'll answer from a return on capital employed. We target 20% plus on all the businesses where we want to make our investments. Of course, not all we are able to achieve. In some cases, we do take investments, go-ahead decisions, even when it is in the 15% range. So it varies, product to product. So I won't be able to give you a clear specific answer of that 1,000, how much will be at what percentage. But broadly, everything will be in the 15 to 20% plus.
Okay. And so on margins, we know exports and aftermarket are a bit better margins than domestic OEM. Can you give a qualitative differential of magnitude between these export and aftermarket versus domestic OEM?
No, I mean, again, it's very difficult. Your statement is absolutely correct. The aftermarket and export margins are better. But again, it's very difficult to generalize. It depends on the product, to which customer we are supplying, also the export order, and whether the export order is to aftermarket or OE. So it's very difficult to give a number.
Okay. So the last is the tax losses that you would have created in Rane NSK. How much is cumulative tax loss that will be available for us to take advantage in future years?
Yeah, there will be, losses that are accumulated in Rane NSK, which as and when we make future profits, we'll be setting up. So I didn't understand your question.
So cumulatively, how much tax loss that will be available? Or maybe I'll just cumulate the last 4 years accounting losses.
Okay. I think about 150 crores is available.
As a tax credit?
Yes.
Okay. Sure. Thank you, sir.
Thank you. As that was the last question for the day, I now hand the conference over to the management for closing comments. Over to you, sir.
I'd like to thank everyone for your time and all the questions. Hope we were able to answer them to the extent all of you were expecting. Of course, we will continue to do our best, and hopefully, the markets will also support us in the coming quarters. Thank you, everyone.
Thank you. On behalf of Rane Group, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.